All right, so let's start with USD JPY since we are here. Let me take off all of this. This is my markup on the weekly. If you're new here, I trade what we call naked Forex. I don't trade with indicators or anything. The reason you may see an indicator, I'll throw one on just to see if my direction is right. So here we have a DeLorean indicator just to confirm my direction. As you can see, the momentum is all pushing up. So I take it off. That was the weekly, so I dropped down to a daily. I'm looking for the next area of interest. So this was the entry on USD JPY. If you missed that, don't worry about it. Let me show you why. Back to the weekly. The next true area of interest is up here. Way up here. It's already past these highs. So it's already captured this money. The next area will be here. The next one after that will be up here. So what we can look at there's something called a banker's candle. So a banker's candle is the last candle before a massive move in a particular direction. So on the weekly, let me show you what that means. If we look at this candle right here, this candle last this candle here, this little bitty gray candle is the weekly, so it's not that little. This is the last push down before the push up. So if you miss a move like this, and it doesn't matter if it's USD JPY, Bitcoin, SPX, it could be anything. This will be considered a breakout right here. Some people do wicks, some people do bodies, but let's say we use the wick. If you miss the move, it's all good. Be patient. Wait for the candle to come back to retest this area. Or if you'd like to and you're confident about the distance of where the next major or the next key area of interest is, this would be a potentially profitable trade. But if you miss a move on any particular pair, be patient. Wait for it to come back to the banker's candle to retest. So as you can see, it's showing some downward momentum. So even if you don't want to wait for this one, if you look within this area right here, this is the last push down before the push up. Thank you, Chi. Be patient. You missed this entry. It's all good. Wait for it to come back. Wait for price to come back, retest this area. So I will put an alert here. Once it retests this area, then you can take the push up. Remember, what I showed you was the weekly. So watch this. Look at the potential. Now, this will take some time to reach, but that's almost 600 pips. The way I trade, I'll wait for it, but most people won't. That's trading, ladies and gentlemen. It's not always about what you can get right now. It's about waiting for the most opportune time to get into a trade. Here's another one. So let's get rid of these. Here's another one you could wait on. Right here. Or even right here. The last push down before a massive push up. So if you're patient.
Carlton?
Yep.
Hey, my name's Sutan. So I'm still here. I was wondering why did you choose those specific areas as is it because that's where the bear market is and stuff like that? Is that what they say, the bear market and stuff?
Well, it's not really a bearish market. Let me show you why. So when you hear terms like bearish, bullish, you're talking about the overall direction. And this is a very short term, but if you look at the overall direction, would you agree that that's an uptrend?
Right. Yeah.
Okay. So the reason I select those particular candles or areas, it's not so much about the candle as it is the area. So the overall area is here in terms of the breakout.
Okay.
You see that?
Yeah, because yeah, I see it. I see
Okay.
it.
So the
I don't
reason,
understand what I'm seeing, but I do see that it's something in that those areas that you. That's all I understand.
all right, so let me see if I can kind of help you understand. So when you are looking at trading, it's all about what they call market structure. Market structure consists of areas of support, right?
Right.
Support, resistance, trends. So just keeping it very simple right now. A support level would be where the market,
That's like the bottom one, right? That's
exactly, the floor.
okay.
So that's, we could say that's support because if you look, price keeps bouncing around in this area, right?
Okay.
Resistance would be your ceiling where price has not broken out yet.
Okay.
All right.
All right.
Trend is the direction because we agree that it's in the uptrend. Make sense so
Right.
far?
Right. It does.
All right. So when I find areas to trade, I'm looking for where the market breaks structure, meaning it breaks out of an area of support and resistance. Make sense?
Okay.
All right. So if this is a level of resistance, would you agree that the market broke out?
Yeah.
All right. So in general, when the market breaks out of a particular area, in general, there is no guarantees in trading. There is
Mm-hmm.
nobody who knows exactly what's going to happen. So you'll never hear me say, I know this is going to happen. What I'm saying is, in general, because of how the market behaves, once it breaks out of a certain area, more than likely it will come back to do what we call retest that area. Does that make sense?
Yeah. Basically, it comes. Basically, it's gonna go up and then come back down.
And come back down. Why? Because that's how the bank gets its money.
Okay.
The bank cannot enter a stop loss or a market execution like we as retail traders can. So
Okay.
the way it collects its money, it knows that most people, retail traders, that's what all of us are, no matter how good somebody is, they're a retail
Mm-hmm.
trader because 99.9% of the population does not have the money to trade with the banks. So they know retail traders will come in and put orders in these areas. The way they make money is to come back and take money from us because they know we put orders in these areas. Does that make sense?
Okay.
So the markets will break out. We say, "Oh man, that's support. Let's put our buys in." Cool. When the banks and the big guys see that, they come back, they sweep all of that money, and then they move in the direction. Does that make sense?
Yeah, so is that why you say is that why you were saying that you just be patient and wait for that?
Yep.
Okay.
That's
Okay.
exactly why. Because there are three forms of analysis. There's technical analysis, which is what I'm doing, marking up the charts. There's fundamental analysis, when we look to see what news is doing. That's where you go to places like Forex Factory and see what type of news as it pertains to the market is happening. And
So
then
I got a
there's,
quick question. Can I ask you a quick question about that real quick?
uh-huh.
So when I was I noticed that it wasn't the pairs on there like how this has USD and JPY. It just has like one thing on it. One, I guess, currency on there, not the whole, not both of them. Like does that make sense? Well, I don't know if I'm saying that right, but so it has USD with the folder next to it, but it doesn't have USD JPY with the folder next to it.
Yeah, because that's probably referring to the dollar index, the DSY. I'm not sure exactly what you're referring to, but that's probably why.
Okay,
Make sense?
kinda.
So the third area I was going to mention, Chi, you muted me. Okay. The third area or the third type of analysis that I was going to mention is what we call psychological analysis. What that
Okay.
basically is the sentiment of everybody trading. What are they going to do? Most people trade according to breakouts, support and resistance. Because of that, the banks know that most people, when they see an area like this, will put orders in. So the bank knows that once these orders come in, they can come sweep the market. That's what they call liquidity. They come pick up this money and then make the move. That's why it's important for you to be patient and wait. Try to think how the bank would think. Where is the most money sitting? Wait for the banks to come and take that money. That's why we call these bankers candles. Wait for the banks to come and take this money. After they come
So
make that move, you take the move.
so the bigger candles are called banker candles. Is that what you were saying?
When you see a move, a sharp move in one direction and then
Okay.
a breakout,
Yeah.
yes.
Okay.
Great questions. All right.
That's all the questions I have.
Cool. Don't mind them at all. So here's some levels you can pay attention to. Here, this is not really one because that would be consolidation right here. And then my other one that I had is right in here. So if price breaks below this, I would be looking for it to come all the way back here. And then I would be looking to buy it back up. Because it never came back to retest this area. Does that make sense? Put in the chat if that makes sense. Yes, Chi. All right, so with those explanations, let's go ahead and look at some markups so you all can go on about your day. So as you all know, I mostly trade gold and the indices, and I had this marked up. What happened to it? Oh man.
You have any thoughts about SPX today?
Oh, absolutely. Let me mark this gold back up. All right.
Also, is DJ going to keep falling?
Is it going to? Was that the question? Is it going to?
Yeah. Yeah.
That I can't tell you. What I do is I mark it up and see if it meets the conditions that I have marked up, then I enter the trade. All right, this is my gold area. Right in here. Yep. So gold, for me, is entering a sweet spot to trade. This is why on the 4-hour, you see that big, here's an example. We had a push down, then a massive push up. It's come back to that area. So depending on how the market opens and what gold has done, I would be looking to potentially enter a trade. So we had a push here, came back to retest that, started pushing up. We had another right here, this candle. Right here. We had a push down. We could even do one here. We had a push down and then a massive push up. And I think this is the one I had marked. So I would be looking for gold to come back into these areas, either here, and it's already in this area. So I'll be waiting to see what happens. This will be a potential buy. Up into this area and this area, provided it does not break below this area. See, if it breaks below here, then here's a target. So let me mark that up too. If it breaks below here, this is a potential sell area. And then this will be a potential target. If it bounces or rejects here, here are my targets. So it doesn't matter to me what it does. I'm just reacting or responding to what it does. Does that make sense? So that's gold for me. This area is what I'm interested in. Come on. I'm interested in this area right in here. All right, let's look at SPX. SPX has already entered my buy area. I had it marked up. I don't know what happened. See, that's my target. There's my other target. Key area right here, though. I'll be looking to see if it continues to the upside or rejects. If you've been following me a while, I had this marked up for months. Now, I thought it would come back to retest these areas, but it hasn't yet. That's why I think we're at a key level right here. You can see by the wicks that it did not want to break below these areas, and it took off back to the upside. So based on that, my targets are still intact. This stuff I marked up a long time ago. Key area right here. Let's see what it does. If it rejects, here is the initial breakout. Right here. So if it rejects this key level, look for it to come back to these areas. If it returns to this area and does not break below, then for me, I would be looking to buy it all the way back up. Again, the last push down before the push up. And you have a morning star right here. Always a good sign for me in terms of a potential buy.
When you say morning star, what exactly do you mean?
Okay, good question. Let me slide down. R2 patterns. Morning star. Star. Let's start there. See if I can change the colors. Nope, won't work. I was trying to change them independently. All right, so morning star is a buy pattern. Morning star looks like this. You have a push down. You have another candle with a longer wick. Then you have another candle with a shorter wick. When you see that, let me see if I can show it to you here. Right here. See this? See that? You have a wick on the left, you have a longer wick in the middle, and then a shorter wick on the right, and you see a push up. This would be a candle in the opposing direction, so let me do that one. Okay. That was the border. There we go. Forget it. All right. So you have a candle pushing down. You have a candle that pushes down some more, and then we get some rejection. That's all the wick is, rejection. Then you get a candle in the opposite direction. There we go. That's a buy pattern. An evening star is just the opposite. You have a candle that pushes up. You have a candle in the middle. May push up a little further. Gives you a longer wick. Then you have a candle to go in the opposite direction. And gives you a wick. See that?
Yes.
Evening star is a sell pattern. Morning star is a buy pattern. Morning star, evening star. So if we come back to the market, you can find them all over the place once you know what you're looking for. Here's one. See the 3 wicks? Look at that middle wick. How it's longer than both. Then you have a push up. Here's one. We have a little push up. Here's one. We have a push up. Does that make sense?
It does. Thank you.
You're welcome. Now let me clean all of this up and come back. Have a breakout to the upside. Here's a key level right in here. So with that push up, the next key level, if it continues up, is where it already was, right here. This is a key level because we had an evening star here. This is a potential target. Where's my buy? There we go. If you have not been in this trade, this is a potential entry. You still need to wait for it to break out, come back and retest. My breakout is here. I don't know how I did stop loss. This was my my actual entries here, but this was the breakout here. Now I would look for it to come back to retest this area. If it fails to break below this general area, I'll be looking for it to push back to where it was and then potentially make a new higher high. My new higher high, when I don't have a high, I use fibs. Does that make sense? Here's my key level. Here's another key level. So that's what I'm looking at for SPX. Same thing on US30. This was the breakout here. I mean US30, yeah. This was the breakout here. Already hit this target. The next target is where it has already been. Beyond that, potential high here. That's how that works.
Hey, Carlton, did you start off by studying one pair first before you started? Because I saw you go to different ones, so I was just wondering, like, did you start off just analyzing one until you got yourself comfortable to work with all the other ones? Or,
No, actually, I started off looking at multiples, which was my mistake. I tell people now, find 2, 3, maybe 4 pairs. And in those pairs, in that search, find pairs that kind of correlate with each other. With each other. For example, a lot of people who trade Euro USD will trade GBP USD or Euro JPY. A lot of people who trade GBP USD will also trade GBP JPY, things like that. So find pairs that kind of correlate or inversely relate to each other and trade those. I started trying to trade everything. And through trial and error, through blown accounts, through mistakes, I realized that I need to focus on a few. So what you see here, these are the ones I focus on. And from time to time, I'll show you how my setup is. I generally trade the indices in gold, which is why you only see these here. And then if I decide to trade USD pairs, I don't know why I have USD Mexican. I don't trade that. USD ZAR, I don't trade it either. I'll trade these 3. If I notice something in the Euro pairs, these are what I trade. But I don't trade them all together, if that makes sense. I don't trade any more than 2 at a time.
okay.
You can master one pair, only trade that, and make all the money your account can stand.
Okay.
Would you be able to recommend Forex pairs that are very beginner friendly?
Based on my experience,
Yeah.
I wouldn't recommend anything, but based on my experience, Euro USD is a slower moving pair.
Gotcha.
The GBP pairs, when they break out, they move fast. But they'll be in consolidation for a while, and then all of a sudden you'll see a breakout. And it moves rapidly. Let me see if I can show you an example. If you notice, I group them too. USD pairs, GBP pairs, Euro pairs. You'll, again, from my personal experience and how I prefer, I group pairs based on the first currency. So let's look at GBP USD. Let's look at the daily. So on the daily, all right, this will be considered a false breakout on the daily. On any other pair, that's a lot of pips, but on the daily, this could be considered a false breakout. But let's drop down. As you can see, once we drop down, you see massive moves. Well, on the 4-hour, we can put a resistance right here. And I know I may be moving fast, and some of you may not understand how I'm able to do this. It's for 2 years, this is what I've been doing. But let me kind of show you. When I do support and resistance, I look for at least 3 touches. 1. That's a lot. That's a lot. So that's an area where price played around. Then, boom, you had a breakout from that wick. Let me put, remember what I said about that banker's candle? You could even come back to this one, but it already broke out and retested, so now it's gone. We had a breakout of this candle, it's gone. This GBP, since it broke out, it could come all the way up to here or beyond. So it'll consolidate a while, and then when it moves, it moves. So let's say it goes from here up to here. It's a 250 plus pip move. That's decent money. If you're trading, well, it doesn't matter. If you're trading 0.01, a micro lot, that's $25. You may say, well, Doc, that's not a lot of money. I always like people to compare it to a savings account. Let's say your account is $100 to $200. You put a micro lot on this move from here. That's your buy entry. This is your target. Let's say it's $200. Trade profit $25. Return on investment. Show me an account or any type of investment that's giving you 12.5% in 2, 3, 4, 5, 7, 10 days. That's what you have to look at. Don't look at the amount. Look at the return on your investment. If you approach it from that perspective, you'll be more patient with your trades. You'll be more grateful for your profits. It's not about amounts, it's about return on investment. I will take $25 on a $200 trading account all day, every day. In terms of stocks, if you look at the S&P, which a lot of people say is the place to put money long term, the S&P annually does about 8%. So you've just outpaced the S&P. Hope that makes sense to everybody. So your account balance is $200. You make $25 in one day. My recommendation is to not trade for a few days. That's my recommendation. Because you've already made 12% on your money for the week. Come back next week. Last week I didn't trade at all because of what I had done the previous week. I withdrew my profits, went and spent some time up and Chi saw me, went and spent some time up in New Jersey for a week. No trading. Now I'm back for this week to see what we can do. But because I look at trading as an investment now and not just quick money. So I hope that helps. So since we're here on GU, I'll be waiting for a retest back into this area. If it retests, I'll be looking to buy it up. First target. Second target. Let me show you how that looks in terms of risk to reward. Come over here, get the long position. This will be my entry. This will be my main target. Stop loss right in here. You're looking at a 1 to 5 risk to reward. That means for every dollar that you risk, you stand to make $5. That's how you should start looking at trading. I do not trade less than a 1 to 5 in Forex when I trade it. I prefer 1 to 7, but I don't trade less than 1 to 5. If I can't get $5 for every dollar in Forex, I don't trade it. In indices, I'll do 1 to 3, but in Forex, 1 to 5. Any pairs you all want to look at in particular? See what's going on with Euro USD. Yeah, I already had this marked up. This is a potential sell limit. Why? Because we have a push up before push down. So I'll be waiting for Euro USD to come back up here. If it doesn't, it doesn't. But I'll be waiting for it to come back here.
Could you look at Euro JPY?
Yep. Let me put this target on Euro USD. There's my first target. There's my second target.
I think all the JPYs had a breakout all this week.
So hopefully everybody who trades those will be waiting for a retest. Let's look at the potential on a short. Right in here. Look at that. 1 to almost 7. And that's actually too much of a stop. There we go. 1 to 10. Yeah, that's more. There we go. All right, did you say UJ? UJ or Euro JPY?
I think it was I think it's the same thing. I don't know.
No, it's not. UJ is USD JPY.
Yeah,
Oh,
EJ,
no.
UJ, and GJ, I think all have breakouts.
Oh, okay. I think I was looking at EJ.
Okay, let's look at EJ. Here we are right here. Yep, we did have a breakout. It's gone too. Whew. On the daily, here's the candle. Here's the area you want it to come back to. It's out. Let's drop down. Let's see what we can get. Yeah, it's out. Whew. Here's one that came back and retested already. Here's a few. Yeah, it's out. Push down before the up. Retest. Push down before the up. Here we go. Here levels right here. On the daily, this is the big one. If you drop down to the hourly, here's the next one that you'll be looking at. If it breaks that, $4 Yep, that's out. Yep. Let's see where it can potentially go. From where it is now, yeah, you have another 145 pips to the next key level. So let's see what happens. There's a potential retest if it breaks below. Here's another one. Here's your target. This is the big one though. This is the one I'll be waiting on right here.
Would you say the same for GJ?
Let's look. Wow. Man, that thing was out. Right here. Jeez. Let me show you something. I just deleted it. Let me show you something. Last push up. Let's say this was the one we were looking at for the last push up. and we drop a limit right here. Even if we see if I can get the exact, somewhere close. Look, if you did body, let's say you did body, drops down, wait for it to retest. Psh, see how many pips that was from here. 130. Some people call it the teacup. Same thing. That's all a teacup is. You enter a sell limit where you see candles like this, like momentum candles. Where's that? Here it is. That's a teacup. A lot of people make a lot of money using the teacup pattern. For now, it broke out. So here's the last push before the breakout. So I'll be waiting for it to come back to this, because it's gone. Let's see where it could potentially go. Look at this. Here's a key level. Let's see how many pips that is. Look at that. Next key level, 430 pips away. Here's another level you could wait for it to retest. There's a potential retest. So it's all about patience. Here's a potential target right here. How patient will you be? Any others before we close? I'll be dropping these in the group chat too.
Can we
Thanks
look
so
at
much.
UJ?
UJ?
Yes, please.
Yeah. Already marked up potential retest. These are areas of potential retest as well. If we look on the larger time frame, it's already come to sweep these areas. It could potentially come here. Next one is here. This is the next big one. Now, from where we are, let's see, is it worth it? Yep. 135 pips. The big one, 400 pips, absolutely. Potential retest zone here. You have a nice little distance. Not little, but you have a nice distance here. Here. Of course, you don't have to wait for it to get here. I mean, I hope you Once you've cleared 1 to 1 or 1 to 2, start taking partials and then just move your stop loss so to secure your money. $5 one is better than potentially $20 if it doesn't make it. So always think about preserving capital. But I'll drop all of these in our group. Appreciate you guys coming on. Hope you learned something. And I'll see y'all on the charts this week.
Thank you.
Thank you so much.
You're welcome.
Have a great day.
You too.